a lot of gray. So taxes in and of itself are black and white and a lot of gray area. So what your personal tax situation might be may be very different from someone else's, and what strategies you may take on your personal taxes for business purposes may be very different than someone else because of that gray area. So I just do want to highlight that. As many of you probably know, as business owners, you will receive tax forms from Beachbody, and just having been in the business and knowing that component of it, you will receive what is a Form 1099. Each business has to distribute to any of their contract workers, essentially, if they are paid over $600. So if you're paid less than $600, you may not receive an actual tax form from Beachbody Corporate. Some choose to issue those even if they're under $600, but you are supposed to report the income regardless of whether it is over $600 or under $600. So anyway, so just a little background there. So taxes. There's nothing quite like the word taxes to instill fear into the heart of any small business owner, right? Not many owners are truly confident in legal areas like taxes. Every year, new tax laws are implemented, and you're too busy running around trying to build your empire to mess with or keep up with tax laws. Plus, you likely have no desire to learn taxes regardless. But hear me out here. Even if you hate everything about taxes, if you want to run a successful business, you need to understand the basics of financials and taxes. So taxes are just another facet of your business. You can't ignore them. They're never going away. The only thing to do is learn how to deal with them. Again, going back to my opening statement, deal, okay? There are a few things you need to understand before we get started. So feigning ignorance won't save you. Denial won't save you. You don't need to become a tax expert. You do need a working knowledge of the tax system or business law, your filings, and preparing of your taxes to some extent. And it won't be as hard as you think, okay? The last one is the most important. I promise you that it's better to grin and bear it and learn a little bit of the basics. And then once you get a handle on your tax situation, you'll be in a much stronger position down the road, okay? So first thing, there are a million of small businesses in the world. And not all these businesses are true businesses in a legal sense. And I do want to highlight this here. One of the first things you have to understand is whether or not you actually have a business, or do you have a hobby, okay? Because those tax implications are dramatically different, okay? So in a IRS's view, are you in a Beachbody, what you call business, with no real intent to grow a true business for profit, okay? If we're just dabbling a little bit and, well, I don't know, I like fitness and I'm going to drink a shake and I'm not sure what I'm going to do with it other than that, maybe I'll help one person here or there randomly, you're teetering on a little bit of whether it's a hobby or a business, okay? So if the IRS, and this isn't to instill fear in you, but the IRS could look at you on your personal taxes, and if they see a net loss, meaning your expenses are more than your revenue that you're generating, so let's say I earned $600 from Beachbody, and I deducted $1,000 in expenses, so I created a $400 loss, okay? Over time, the IRS tends to look at returns that are reporting losses year over year on a personal business. And the reason for that is it very much looks like a hobby, and you're just writing off expenses that are personal rather than business related. So just something to think about over time. Sure, all businesses are not going to generate income in the first year, maybe even the first couple. So just ensure that if you are truly reporting something as a business, you have a business intent, and over time it should be profitable. And if not, maybe we need to go back and look and make sure we're documenting everything appropriately in case you were to ever get audited, that it does look like a business, and you wouldn't go back and have any penalties due. So that's just a little caveat I want to be sure of, because sure, we all love health and fitness and helping other people, but be sure that you do have a business intent. You're documenting things, you're saving receipts. You potentially have an accountant of some sort. It doesn't have to be a CPA. There's tax preparers out there that are not CPAs, but things of that nature to think about. So on another high level, your Beachbody business, you'll receive a 1099. All of that activity can be reported on your personal income tax return, your 1040. Some of you, and I don't know on this call, may potentially have what they call an LLC or a single member LLC, and I don't want to get into too technical, but that requires that it's an actual entity that you set up, but you still file the activity on your personal return. There's many reasons for that. Potentially, if you're teaching classes and you want some legal liability, that is what an LLC would provide versus not having a business entity set up. So something to think about. I don't know all of your personal tax situations, but you may talk to some type of tax preparer about that. If you're getting heavily involved in the business, generating substantial income amounts, is whether you need an actual business entity set up versus just running everything through on your 1040. The next question that we need to ask ourselves is, if it's going to look like a business, potentially if you have an LLC set up, you should have a separate bank account. Therefore, you do not want to mingle or commingle both your business revenue and business expenses with your personal side of your life. Reason for that, again, is they look at those things as more hobby related than business. So if you are an actual business, run your business like a business, have a separate bank account for it potentially, that all of your, if you send something out in the post mail and you have postage expenses, samples that you buy, things of that nature, those would be ran through your business bank account versus your personal account. Looking at just revenue side, obviously you're going to have your Beachbody 1099. I don't know, I mean, if you teach classes somewhere, you might get paid for that, so that would be a revenue generating activity that you would have. Most of the questions that people have related to Beachbody or to small businesses are on the expense side. What can I deduct? What can I not deduct? And here's where we get into a lot of black, white, and a ton of gray area. So the things I think of when I think of Beachbody, okay, we're great at giving gifts to people, incentivizing people for things. Gifts are fine, but there is a $25 per person limit. So even if you give someone a $25 gift in January and the same person a $25 gift in June, it's still a one-time $25 deduction. Okay, so just keep that in mind as you do things in that nature. Meals and entertainment. If you take someone out that's a Beachbody client or you're meeting them for lunch, things of that nature, that can be deducted, but it will be limited to 50%. So if it's a $10 meal, you'll only get to deduct $5. So just something to have in the back of your mind to know it's not a dollar for dollar deduction. Postage. So we mail out lots of things. It might be a gift, could be samples, could be, hi, how are you doing? Could be a Shakeology recipe, anything of that nature, but keep your receipts from the post office or UPS or wherever you might mail something. All of that would be fully deductible expenses for your business purposes. Also, any of the packaging that you may send things in, boxes, envelopes, things of that nature. Okay, so a lot of people have questions. Samples. Yep, if they're used for business intent and not for your personal use, Shakeology can be deducted, okay? If it is the question of, I order Shakeology for myself and my husband and my kids every month, is that tax deductible for business purposes? No, that's personal use. So if you have a separate order that is 100% dedicated to you sending out samples to other folks that you want to encourage and share Shakeology with, great. That's a business expense. Just keep the receipts. And I know in the back of your office, and on one of the tabs, you can choose like your personal order. So if you ordered it through your personal account, at the end of the year, just run a report. It's pretty simple. The back office is a great way to get easy tax information out of there, because you can get your income out of there, and everything you purchase throughout the year is also in there. I know, because I've done that. But a great way to just be able to go in there and see what you bought throughout the year. Another question that comes up a lot of times is on the home fitness programs, okay? If I run some type of fit club and I buy a program and I'm using it at that fit club, then that's for business purposes. So you could say that that's a business expense, okay? If I'm buying P90X for my own personal use at home, then no, that's not deductible. So be sure that you can look at things and really say this is business versus my personal use, okay? If you run a fit club somewhere or teach a class somewhere and they charge you for the room that you might use there, then that would be a business expense and deductible. Okay, your coach fees that you pay monthly, your club membership fees, things of that business-related fees that Beachbody charges you to actually run your business would be business deductible expenses. Again, I know those used to, I haven't ran one this year, but I know last year you just run a report. All of those fees should come right up on the report from the back office. So pretty easy to sum those up at the end of the year. If you attend events that are business-related events, so Super Saturday events or some type of training event that you were charged a fee to attend, those would be business expenses and deductible. Mileage, so you're driving from, let's say you live in, I don't know, I'll say Illinois by way of example, and there's something over in Indy that is business related that you need to attend, then that mileage, you can get the mileage rate out on the web, and I don't even know what it is off the top of my head right now because it changes usually annually, but you can deduct that mileage for that business trip. If it is mileage that's just from your home to a gym that you teach classes at, that's not deductible because that's part of your normal business commute to go teach a class that you're committed to teaching and not deductible. A big question that often comes up, so you're a home-based business, right? So what can I deduct that's around my house? So a home office deduction, okay? If you have a designated area, not I'm going to sit on my couch tonight because this is my office and I'm going to watch a little TV while I'm doing a little bit of social media work and call this my office, that's a no. So if you have a room in your house, or closet if it's a small space maybe, that is deductible, okay? There's certain parts of that, so if you rent somewhere, the square footage of that room, that proportion of your total place that you, square footage of the place that you rent by way of example, that rent would be deductible. So if your office is 5% of your total square footage, then 5% potentially of your rent, 5% of your utilities, 5% of your internet, things of that nature would be deductible. So it's just a pro rata percentage of your total square footage, whether you rent or you own a home. Okay, be careful there. People get carried away at something the IRS kind of looks at on home office deductions to make sure people aren't getting carried away deducting the entire square footage of their house as an office. And if it is and you're using it all, then so be it. Another thing that comes to mind is cell phones, because probably you're carrying around your phone all the time, taking pictures, doing a workout, just using Facebook or other social media from your cell phone. What portion of that is deductible? If you pay for your cell phone bill, it's not being paid by another employer at another job that you work at, but if you personally pay for your cell phone bill, then most cell phone bills are looked at personal use, but you can deduct business portion of your phone. But do some type of tracking system and come up with something that you document maybe monthly that says about 30% of the usage was business. So you can then deduct 30% of the cell phone bill. But it's just the percentage that you use for business. So just be wary or cautious of that. If it's 50%, it is 50%, or if it's higher, then so be it. But make sure that if someone were to ever look at your records, you know, you have some detail that substantiates the percentage that you are deducting. One other item is, and this might apply if you essentially, you work with Beachbody and you don't have another full-time job anywhere, and if you're married and you have a spouse and they also don't, and you have your own health insurance that you pay out of pocket, it's not paid through another employer, your self-employed health insurance, make sure you take that deduction on your tax return. I know that sometimes it's not a small amount, and I'm sure it's growing every year, so most people don't forget about it. But be sure that you note that if you are doing any health insurance that's paid out of pocket, that you can deduct that. those are the big ticket items that come to my mind. If you have a computer, you purchase a computer. If you have a personal computer and you're using another computer solely for business purposes, then you can write that off as a business expense. Okay, so just be sure that you truly are using it for all business purposes, not your kids aren't playing games on it in the evening, and things of that nature. Let me think about anything else. Those are the big, really ticket items. I can't think of anything else just from having been a coach that you might deduct, but I'll open it up for questions because I want to make sure there's plenty of time, because oftentimes there's more questions that you might have than things that I've covered. But so I'll turn it back over to Ophi.
Hey, girl, thank you so much. You know what? I had a question for you. What about mileage and all of that? How do we figure that out?
Yes, mileage is deductible. Again, if you're going to Super Saturday, by way of example, or we'll even use a flight. This brings up that whole. If you fly somewhere for business purposes, then those travel costs are deductible. Okay.
So like Summit.
If you're driving Sorry, I didn't hear you.
So like Summit.
Yes, like Summit. Yeah, by way of example, Summit, perfect example. If you're traveling by air to Summit, that is a travel expense that's deductible. There's a line item right on your personal return where you record all your business activity for travel. Okay, that would also be your hotel accommodation.
Okay.
If you're taking taxis or use Uber or use Carry Car Service, anything really that you can think of that is an involved expense during that business trip, those would be deductible. Okay?
So can we
drive
deduct
your
mileage?
car,
Oh, go ahead. I'm sorry. I'm sorry, honey. Go.
If you're talking about driving your car, if you're driving your car to a Super Saturday or some other type of just training event that you're going to, that mileage to and from your home base is deductible. And there's a mileage rate. I can't remember what it is right off the top of my head because it changes every year and I don't do a lot of personal taxes anymore, but there's a mileage rate of so many cents per mile that you get that you can deduct on your return. You can easily Google it and find that. How we do it right now, but I'm not saying on a computer. But yes, you can deduct mileage. Just be sure if it is mileage that I kind of mentioned earlier, if you're teaching a class somewhere, because I don't know if there's any instructors on the line, but if you're teaching a class somewhere, let's say I teach at the Y, my mileage from my house to the Y is not deductible. That is my normal course of business. My job is to go there and teach a class.
Okay.
That is not deductible. Just like me going to my employer, that drive is not deductible. That's just part of what my job is to do. But if it's something out of the ordinary that is business related, that mileage would be deductible.
Okay. I have one more question, and then anybody else can ask their questions. S corporation and LLC.
Yep.
What's the benefit of an S corp or doing an LLC? I know the LLC is liability and all that, but the S corp, is that?
Yeah. Same thing. I mean, S corp, essentially, if you have any type of business entity set up, when you're a small business, you're going to be an S corp or an LLC. An LLC essentially allows you can have owners in it, but for Beachbody, essentially, let's say you're the owner of your business. So you can set up a legal entity that is an LLC, and if you only have one owner, they call it a single member LLC. And if you only have one owner, you do not have to file an entirely separate business tax return, even though you have a separate business entity and tax ID. It's still all reported on your personal 1040. So it saves you an additional tax filing. So most people, at least, a lot of Beachbody coaches that I know that have entities set up, they are an LLC, which is a single member LLC because they're the only owner of it. And so they only report all the activities the exact same as you're probably doing now without an entity, except at the top of the Schedule C on your tax return, you'll put in that tax ID that the IRS will give you when you set up that entity, and it's just legal protection, essentially, that separates your business from your personal side a little bit. An S corporation requires you to actually file an S corporation tax return. So it's just an additional cost that you would have.
Okay.
And they both, depending on your personal tax situation, someone would really have to tell you which one is better. I'm going to guess most people on the line, a single member LLC is probably the way to go.
Okay. Very cool. Thank you, girl.
You bet.
Any other questions?
I have a question. Hello.
Yes. Hello.
All right. So my husband and I both work full-time jobs, and he, he's a guy. So let me just. We talked about taxes this year before we did them, and I said, I think we need to go to an accountant, and we always have to pay, and so he was hesitant about that. He always does ours with TurboTax. What is your opinion on that for small business? Because it seems to have all of the boxes for business, and I had to put all that information in. Is it accurate? I don't know.
Yep. Sure. Good question. I will tell you, TurboTax is, and there's some others online that have come out, but TurboTax has been around forever. I will tell you, if you go to an H&R Block, they're probably using TurboTax. I don't know.
Okay.
I shouldn't say, but buying those softwares, they are not CPAs. They're using a check the box system. So information I might tell you, they may not even know, because they're not CPAs, and they are just educated to sit at a computer and look through these questions and ask you those questions and check boxes off. So there's a lot of times they can get your tax return done. It will be accurate. There could be potential deductions that you could have taken that they didn't ask you the right questions to be able to get the information for that you've missed out on. Their advice on setting up legal structures and other financial advice and tax planning is not going to get you probably where you need to get over the long term. But from an accuracy standpoint, if you're using TurboTax, the system isn't going to miscalculate it. It's just a matter of if you've actually included the right things or not. Okay. So I wouldn't be fearful of that at all. From an accuracy standpoint, it's just to make sure, the advantage of getting someone that's a financial planner type CPA or just an accountant or just some type of certified tax preparer is just to look at your overall financial picture to see if there's some tax deductions that you're not currently taking that potentially you could. Also, as your business grows, this is a great comment to bring up based on that when you're talking about that is Beachbody does not deduct taxes from, just like if you were an employee, you get a W-2, okay? So you get a salary. And everyone's like, oh, I make, let's say, $50,000 a year, and then your paycheck is not $50,000 divided by the number of weeks in a year, because your employer takes out your taxes for you. So it usually at the end of the year, you get a refund or you're about break even. Beachbody is giving you 100% of what you're due. You're liable to pay those taxes. So you need to be cautious as your business grows that you cannot wait until the end of the year to pay all of your taxes. You need to be making estimated payments throughout the year. Otherwise, you could incur penalties if you reach certain limitations. So something in that, all depends on your personal tax situation and the strategy you want to take. Some people don't want to owe anything at the end of the year, and so they're very conservative and pay as much as possible throughout the year. Some people want to owe the maximum amount at the end of the year without penalty because they don't want the government to have their money all year, and they pay very little in through the year, the very minimum that they have to avoid penalty, and then pay a big chunk at the end. So it's just different strategies depending on, your position. The most conservative is just pay along the way so you don't get to the end of the year and be like, whoa, I owe it what? And I don't have that money because I spent it.
Well, and when we do our taxes through TurboTax, starting 2 years ago, we started getting it automatically started printing out quarterly tax forms for us because we pay enough that we have to do that between our jobs and with Beachbody. But this year, I guess we made too much, and it doubled our quarterly taxes for the coming year. So we about had a heart attack. And
that's where the key to having a tax preparer come in, a person is because throughout the year you should be meeting with them, and they should go, oh, okay, my income's going up this, even if you meet with them only mid-year, you can say, well, okay, my income's really increasing this year based on last year. Let's increase our estimates now so we don't have to pay a big chunk later and be thrown off guard. So, yeah,
Okay.
that's no surprise. And that's what happens, again, just with you not knowing all the tax ramifications of increasing income and certain limitations that get hit. So, yes, be cautious of that. But that's great. That's a great problem to have, right?
Yeah, I guess.
Well, let's put it this way. You'd rather pay taxes than not, I promise. The other is not somewhere you want to be, but unless we all just didn't have to pay taxes.
Okay. Okay, thank you.
You bet.
Anybody else? Questions? What's the saying? Julie always says, smart people ask questions. Shalene says smart
Yeah,
people.
fire away.
So fire away, everybody. You're all smart. Go
One
ahead.
thing I guess I did want to mention too, you get, your expenses instead of at the end of the year trying to compile everything, if you want to use some type of like QuickBooks or there's accounting packages out there that you can buy that are very uncomplicated to enter in things, or you can use Excel spreadsheet by way of example. You just want a starting point, but waiting until the end of the year is always generally a bad idea. Nobody really likes, and especially going to your accountant with a shoebox full of stuff to filter through. Your charge from them is going to probably be higher than it would otherwise. So just maintaining receipts and keeping up with things throughout the year. Then at the end of the year, it doesn't give you such a headache when you're wanting to get your money back for a refund or fretting over what you might owe. Just stay organized.
Hey, girl, I heard that when you file an S Corp that people and I don't know if this is true, but family members can be employees. Is that true?
Yeah, I won't touch on that. That's a tax position you can take.
Oh,
And that's, yeah, I mean, you can, if there's at a certain age and you want to employ your children, there's a lot of that. I don't want to get into too much of that detail. That's a big gray area, and you'll definitely not want to be doing that on your own without tax advice.
no, yeah. Because I have my daughter who's 19. She's a coach on my team, and my husband too. And we have a good problem of having to owe. We've been having to owe a lot more each year, which is good. It's a good thing. But
Right.
I've been advised that maybe going the route of an S Corp is something that's something we might consider this year. So that's what I think I might.
Yeah. It's not out of the realm. It's out there. But it's definitely one of those things that you'll want to make sure that you've had all your I's dotted and T's crossed.
Okay. And do a lot of adulting.
Correct.
At what point do people start looking into the LLC S Corp option? Like, at what point in your business is that a good idea?
It's really, somewhat, a personal preference, and what your risk tolerance is, and really kind of what you're doing with Beachbody. It's not like an income level dollar amount that's out there. A lot of people just do it from a legal protection, especially those that I know that are teaching classes, because you have some, some legal liability if someone gets injured in your class potentially, or things of that nature. So those people probably tend to do it faster, even if the income level is very minimal. But there's other reasons just to do it, just essentially have a separate bank account, because you can't have a separate bank account generally. Some places will let you set one up, but if you don't have this to set up a business account, you need a tax ID, which requires you to set up a business entity to be able to do that. There's no right, wrong. I didn't fee to set up a single member LLC. I don't even know. It's maybe like $75. It's not a ton of money. So if you do it, it doesn't hurt anything.
Okay.
Cool.
Okay.
Cool.
Thank you.
Any other questions, guys? Are we good? That was a great presentation. I apologize to Mike too that I forgot to post the link on our page. not too smart. I was like, oh, nobody showed up. But yeah. So I apologize. And just to reiterate to the guys to the coaches that hopped on and weren't able to hear what we had said in the beginning, this link, just to protect her business and her licensing and all of that, I am going to, I guess, record it. We're going to create the link, but I'm not going to post it on our team page. I'm going to email it to all of you guys. You just need to request it from me, okay? And that's what I'm going to do. All right, sound good? Hey, girl, it was fantastic. Let me turn off the recording, so hold on one second.